Our next guest says the market continues to take cues from central banks and that the Fed's aggressive tightening has yet to derail the economy. Joining us now is Howard Lutnick, chairman and CEO of BGC Partners. Fresh off that company's earnings call, the stock is soaring. He's also the chairman and CEO of Cantor Fitzgerald. Howard, not sure if you heard our interview just now with Cathie Wood. You have such a good grip here over the markets and bonds specifically with BGC. Her view that the inverted yield curve is telling us that the Fed is overdoing it on this inflation fight. Do you agree?
No, it's pretty simple. The 2-year note is saying that rates are going to stay up, where the Fed is saying they're going to stay up too. And yeah, okay, the 10-year note thinks it's going to come down, but we just watched the 10-year note go from 3.50, right, all the way down to 3.25, now up to 4%. So the story is inflation is here to stay, rates are here to stay. Do people think over time they'll cut back? Of course they do. But over the next couple of years, rates are here to stay. I've said it before when we were together, Sarah, rates are here to stay.
Well, I knew you were going to disagree. That's why I started you on it. So this notion that there's going to be a hard landing, do you think with the Fed here to stay, higher rates, that's what's going to inevitably happen?
Well, look, the economy is showing us that it's doing pretty well. I mean, it's shockingly doing pretty well. Inflation's here to stay. You feel it everywhere. You go try to buy eggs. It's unbelievable. The price of things these days are extraordinary. You go out to a restaurant, you go anywhere, the cost of goods and services is just higher. So inflation's here to stay, but the economy is doing pretty well. So it feels like there may be a little recession, but it's going to be lighter than people think. It feels pretty good. Unfortunately, just inflation's here to stay. But otherwise, I think the economy is doing all right.
Total counter opinion to Cathie Wood there.
Exactly. It's like the ultimate bull-bear debate. Howard, I wonder,
our stock is up 10% today, and hers is sort of flat. So I think I would bet.
Howard, what about shelter, or at least rent? Isn't that something that if it does tip, the conversation changes?
Well, look, the idea multifamily is doing pretty well. And the reason multifamily does well is if inflation's there and workers are earning more money, then rents, which are multifamily, right, rental buildings, they raise the rents every year. So the question is, will the people living in multifamily renting, will they have the money to pay a little more rent? And the answer seems to be the market saying yes. So it feels like if service fees are up, rents will be up, multifamily will hang in there better than people think. And that's the feeling that inflation will go through multifamily, not as much through office. Office will be a little trickier, but multifamily seems to be hanging in there pretty well.
So what are you doing, Howard, now? Where are the opportunities for you if you think inflation and rates stay high and the economy can escape something more dreadful, like a hard landing?
Well, look, so BGC, our public company, BGC Partners, is one of the world's largest wholesalers. And for 14 years of these zero and near zero interest rates meant volumes were anemic in trading volumes. The banks didn't trade much volume. Their trading arms were doing less and less business. That's over. So BGC is now a growth company. The relationship between vast issuance and trading volume is back. And so what's happened is over the last 3 months, BGC has just taken off. And all of a sudden people realize, oh my gosh, 14 years of tough times, now will be better times. So you always knew there's always a company that does well when interest rates are back. And now that's why I had me on this show, because somebody's happy, and that's BGC Partners. So you're going to see our business grow. Our investors haven't seen how great the company was for all these years of zero interest rates. And now they're going to see it relentlessly as we go forward.
Really quick, you're also the chairman of Newmark, the commercial real estate. I always ask you about that too, because you've made some strong opinions. You mentioned office is going to be tough, and I'm just wondering how tough the rest of the market is going to be if interest rates are going to stay high for longer here, and if we readjust now, how high they're going to get.
So what you're going to see is, as we talked about, B and C office. Less attractive office space, it's going to have a tough time of it, and you're going to see it repurposed, right? You're going to see it repurposed. It might be, once upon a time, there was no such thing as a loft. We all know the concept of a loft. That was local manufacturing, meaning putting things together in cities. I think that's going to come back. I think they're going to turn B and C office into either multifamily, right, or it's going to be light manufacturing. So people are going to come up with smart things, and it's going to work.
I'm sorry to cut you off, but we're out of time. Thank you so much. We always appreciate your commentary. Happy man today, Howard Lutnick. We'll be right back. Stay with us.